In today's video, we're going to discuss the 4 time series that comprise financial guidance. And the idea is that, in our view, guidance from a public company is what actually drives valuation. It's the internal tool that a company actually has that it can pull to affect positive or negative impacts on the underlying valuation of the stock. And the more or less clarity that a company provides across the 4 time series and then the long-term time series is going to drive where the stock price goes over the short term and long term. And when you can provide clarity across the short term, the 4 time series plus long term, that's what's really going to optimize your valuation and get you the full and fair valuation that you're looking for. So let's get into the 4 time series. And it starts with the current quarter, and then the current quarter plus 1, which is just the next quarter, and then the current fiscal year, and then the current fiscal year plus 1. And the idea is that you need to be providing directionally accurate information across these 4 time series if you want to drive a healthy valuation. If you're only providing one of them, you're going to cause a lot of dislocation in your stock because investors are going to believe that there's an underlying issue and it's going to be harder for them to engage with the stock over the longer term. They need to be able to understand, both in the short term and long term, how the financial performance is going to look so they can then establish a longer term holding period, a longer term bet, which is what most public companies want. So now the second piece here is this idea of long-term targets. And this is your 3 to 5 year period. Typically, you want to give a revenue target 3 to 5 years out or an adjusted EBITDA target, both 3 to 5 years out. Because again, if you want long-term investors, they're going to be here for 3 to 5 years, you need to give that short-term clarity plus that long-term clarity. Otherwise, there's no ability for an investor to make an informed decision as to why he or she should hold this for the next 3 to 5 years and stay with you during that period. So now let's get into this idea of the time series as a signal. And what I would say is that completeness, meaning that you have data on all 4 time series plus the long term, is going to signal a lot to an investor. It's going to signal the health of the company. If you don't have clarity across these periods, maybe there's an underlying issue in finance. Maybe there's an underlying issue in the operating ability of that company. And then, secondly, investability. Again, every public company wants long onlys. People are going to be here for 3 to 5 years. If all you're providing is the current quarter, you cannot expect to get investors to hold your stock for 3 to 5 years. If you want these high quality long onlys that hold for 5 years, you've got to give them the guide map of your pathway to what profitability and revenue growth is going to look like, both in the short term and the long term. And ultimately, if you can't do that, if you can or cannot do that, is what's going to drive engagement. And so again, if you don't have this data, it's going to be hard for investors to engage with your stock. So in closing, it's about having the short term and long term in terms of financial guidance if you want to attract long-only investors that will hold for 3 to 5 years. Thanks for watching.